Hey there, financial navigators. Welcome back to the channel where we demystify the complex world of hard-to-borrow stocks and potential short squeeze plays. Today, we're diving deep into a fascinating case study that's been lighting up our screeners, BJDX Inc., ticker symbol BJDX. This isn't just any stock, it's presenting some truly unique characteristics in the current market. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's zoom in on BJDX. BJDX Inc. operates in the healthcare and medical devices sector, specifically focusing on diagnostic solutions. As a microcap company, BJDX is known for its Symphony technology platform, which features an analyzer and single-use protein detection cartridges designed to measure key diagnostic biomarkers in blood. It's a company at the cutting edge of medical technology. However, if we look at the recent price action, BJDX has been facing some significant headwinds. Today alone, the stock is down 7.43%. Over the last 5 days, it's plunged 21.82%, and looking at the past 30 days, BJDX has seen a substantial drop of 80.72%. Short chart, BJDX 30-day price action. Despite the sharp decline, it's appeared on our hard-to-borrow screener for some very specific reasons we need to explore. What is cost to borrow and why it matters? Before we get further into BJDX, let's quickly break down what cost to borrow or CTB actually means. When a short seller wants to buy against the stock, they don't own the shares, right? They borrow them from another investor, sell them, hoping to buy them back later at a lower price and return them. But borrowing isn't free. There's a fee, an interest rate, paid to the lender. This is the cost to borrow. Think of it like a rental fee. This fee is expressed as an annualized percentage, and it tells you how expensive it is to hold a short position. When this rate is extremely high, it signals that many short sellers want to borrow the stock, but there are very few shares available to lend out. Yes, it can even exceed 100% annually, meaning short sellers are willing to pay more than the stock's value just to hold their short position for a year. It's a key indicator of supply and demand for short interest. Why this stock is hard to borrow right now. Now, let's tie that back to BJDX. BJDX has a staggering cost to borrow fee of 745.4% annualized right now. Highlight CTB number. That is an incredibly high number, indicating extreme demand from short sellers relative to the available supply of shares to lend. We also see an estimated float of only 0.9 million shares. That's a tiny number of shares available for public trading, which exacerbates the borrow issue. While the exact number of shares currently available to borrow is unknown at this very moment, such a small float combined with a sky-high CTB fee is a classic signature of a hard-to-borrow stock. The market is screaming that it's incredibly expensive and difficult to establish a new short position in BJDX or even maintain an existing one. Squeeze mechanics explained. So, what does a high cost to borrow mean in terms of a potential short squeeze? A short squeeze happens when a stock's price starts to rise, putting pressure on short sellers who borrowed shares and sold them. If the price goes up instead of down, their losses mount. When the cost to borrow is astronomical, like with BJDX, that pressure is intensified. These short sellers face daily or periodic charges just to stay in their positions. If the stock price rises significantly, even a small amount, short sellers might be forced to cover their positions, meaning they buy back shares in the open market to return them to the lender. This forced buying creates even more demand for the stock, driving the price up further, which in turn forces more short sellers to cover, creating a rapid upward spiral. That's the squeeze. Our internal composite squeeze score for BJDX sits at 40.5. While this score reflects some intriguing metrics, it's crucial to understand that a high cost to borrow does not guarantee a squeeze. Sometimes, it can also indicate that short sellers have incredibly strong conviction in their bearish thesis and are willing to pay significant fees because they believe the stock will eventually fall even further. Dilution risk check. One critical factor that can make or break a short squeeze thesis, even with high borrow fees, is dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. If a company does this, it can flood the market with new shares, making it much easier for short sellers to cover their positions without impacting the price, or even providing new shares for short sellers to borrow. This effectively negates the hard-to-borrow aspect and can completely derail a potential squeeze. For BJDX, we've checked for recent dilutive SEC filings like -1, -3, or 424B in the last 90 days, and found no evidence of such filings. This is a positive sign for any short squeeze potential, as it means there hasn't been a recent influx of new shares that could easily be bought by shorts. We also found no recent reverse split for BJDX in our lookback window. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Given BJDX's unique profile, what should we be watching for? The current volume is quite low today, at 102,077 shares, especially when compared to its 30-day average volume of 5,649,072 shares. That's a relative volume of 0, suggesting significantly reduced trading activity. Share volume BR, a sharp increase in volume, particularly on upward price action, could indicate new buying interest that could start to put pressure on shorts. Keep an eye on the cost to borrow. Any further increase or a reported shrinking of available shares to borrow could intensify the squeeze dynamics. Price action will be key. A sustained move upwards, even a small one, could force hands. So, BJDX Inc. presents a compelling case for examination in the world of hard-to-borrow stocks. With an eye-popping 745.4% annualized cost to borrow and a micro float of just 0.9 million shares, BJDX certainly has the metrics that catch the attention of anyone studying short squeeze mechanics. While the recent price performance has been challenging, the underlying borrow dynamics tell a very different story. Remember, always do your homework, understand the risks, and never invest based solely on what you see in one video. What are your thoughts on BJDX? Let us know in the comments below. If you found this deep dive valuable, hit that like button, subscribe for more unique stock breakdowns, and share this with your trading community. We'll see you in the next video.